Good morning, everybody. Hey, welcome to Wednesday, May 25th. Hey, as we look at yesterday was a down day. The question is, what will today bring? We have some macro numbers that I think are important, and we'll talk about that and some more retail companies reporting. I think that's going to shed some light too. We'll talk about that and more when Dave joins us here in just a moment.
Oh, fine. Light FM, Bonnie Raitt there. They call me Morning Dave. It's 8:39 now, 21 before 9. Let's check in on money and see what's happening on Wall Street this morning. I'm kind of getting a drip sensation. Because every time we come up with more data, it says, gosh darn, we're slowing down a little bit. Let's see if Phillip Statler agrees from Statler Financial Services. He's on the line this morning. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. Halfway through this last full week of May, heading into Memorial Day. Excited about that. Yeah, I think we're trending a little slower, at least based on the data points we're finding now.
Yep, like I said, drip. We're getting more indications that, we're slowing down a little bit. And yesterday morning at 10, they came out with new home sales, which was one more of the housing-related numbers that we were watching. And it looks like the vote's pretty close to unanimous. It was kind of a miss on that macro yesterday as well, wasn't it?
It really was, Dave. I got to say, it was a substantial miss. I mean, the expectation was 750,000. And that was an increase over the prior month, because the last month it was 709. But listen, it was a significant miss. It came in at 591,000 new home sales.
That's El Cinco, because 16.6% decline. So
yeah,
weren't exactly looking for that. Then I back it up with this morning's numbers from the Mortgage Bankers Association. Every Wednesday morning, they list the number of mortgage applications filed in the prior week. Now, you might remember last week was just an absolute off-the-cliff number. It fell 11% in 1 week. Leveled off a little bit, but still it was down 1.2%. And it does look like the refinance boom is over.
I think I would agree with that. It's definitely gone.
Yep. So at least all the ones they're writing, for all intents and purposes, were new mortgage applications, but still it was off by 1.2%. We aren't exactly heading into a recession, and there's no indications we're in a recession yet. But we're definitely seeing some indications of slowing down a little, aren't we?
We are. I mean, this housing number, you take that with the other numbers that we saw last week. It just continues to pile on, as you will, to the slowdown, and we continue to see that. And I mean, the durable goods orders, I mean, that was definitely slowing down. So to me, the GDP number on Thursday is going to be important.
It's going to be an earth mover. To quantify the durable goods orders, the macro government data dump for this morning, this is the stuff that lasts, that businesses are ordering. April's preliminary durable goods order figure, they were expecting an increase of 0.6%. We got 0.4%, at least an increase, kind of the picture we've had. We're still growing, just nowhere near as fast. Once you exclude transportation, because, well, premium prices on vehicles affect businesses too, they were expecting a 0.6% increase. They only got 0.3%, missed by half. So, yep, we're growing, but about half the rate we were expected to, which is drawing a pretty consistent picture, isn't it?
It really is. And that core capital number, let's just compare that to the month before. It was 1.1% increase, and now it's 0.3%. So that's a definite slowing for sure.
Absolutely. And as long as it stays positive, we can still say we're still growing, and the politicians can point to success, but it's nowhere near as fast as we had been. And it's painfully obvious that at the very least we're pulling in some horns some places. To set the table, the morning was mixed yesterday on the markets. The pure blue chip index, the Dow, was up by 48 points. NASDAQ lost 32, and you'd mentioned Snapchat's report as being a miss in terms of the money that they were able to make. Wow, did that cause consternation on the high-tech stocks? All the big high-tech stocks fell and dragged the NASDAQ down 271 points, down 2.35%. They're going to be at 40% down before we know it.
Well, Dave, I'll give you a little good news. That's not the bottom, right? It's been as low as 11,035. And so it closed yesterday at 11,264. So, hey, we got a little ways to go.
Gosh, thanks. I'm so glad that, we stopped at 31% down.
Hey.
It definitely was hit yesterday off of one of the relatively minor players in social media. One of the concerns that we've had that we've been worried about has been retail, because we had some misses on some of the really big players on retail, and I was kind of hoping that some of the specialty retail reports that were coming out this week would give us some bright spots on the horizon. I gather Dick's Sporting Goods isn't going to be that bright spot, huh?
Well, here's the deal. They did do okay for the last quarter. They had better than expected profit and better than expected revenue. So that was good. Now they missed on same store sales last quarter, but the big fly in the ointment is they issued weaker than expected outlook for the full year. So that's what's really putting pressure on them this morning. They're down almost 13%. They were down as much as 14% earlier this morning, and it will be a new 52-week low. The price right now is $62.15 a share. Wow.
And this just underscores it, that expectations, that's important in any earnings season, but it's obviously got 100% of the wheel on driving the truck this quarter, doesn't it?
It really does. And I'm going to say, we got three other retailers we're going to talk about this morning. And I think they're the only ones that have really given weaker than expected guidance for the quarter or for the year. So the others have seen some big increases. The Express, the apparel, the retailer, the clothing store, they had better than expected results. They only lost 10 cents a share. They're expected to lose 15 cents. So that was a third better than expected. Revenue was better than expected. And they raised their full year outlook for same store sales numbers. So, the exact opposite, right? So they're up almost 11%. Now, let me just say, Dave, they are a very inexpensive stock. Right now, it would open at $2.64 a share, off its low of $2.33. And the range, it was as high as $8.67 in the last year.
Ooh, my Lord. Well, at the very least, they're seeing themselves digging their way out of their hole anyway.
That's right. It looks like they're moving in the right direction, right?
That's good. At any bright spot, I'm happy to hear, because I don't really have a lot of optimism right now.
Yeah, I know. So let's finish out retail. We got Nordstrom's. Nordstrom's, they posted a little wider than expected loss for the first quarter, but the sales surged 23%. And that put them ahead of where they were before COVID hit back in 2020. So they're back to pre-pandemic levels. So that was good news for them. And they raised their annual sales and profit forecast as well. So they're up almost 4.5% this morning.
Now, that's a big brick and mortar store. That I'm really glad to hear.
It is. And the last retailer I have for you is Urban Outfitters.
Okay.
Urban, they fell a little shy of the analyst forecast on both the top and bottom lines, not by much. But of course, they highlight all the negative things of inflation and supply chain and all those type of things. But they actually are, at least when I looked a minute ago, they're still moving up. They took a bath yesterday. Now, yesterday they were down almost 8%. But they're up today about 1.4%, just barely off of their 52-week low at $18.24 right now. So that gives you an idea of what retail is doing. And the only one that's really getting beat up really bad is the sporting goods, Dick's Sporting Goods. So
and that really kind That kind of surprises me, but evidently some niche businesses are able to weather the storm through here.
Well, at least for this last quarter, and they've got some positive indications for the rest of the year. So that's good. Now I have two more for you. And they're totally different industries, right? We've got let's do Intuit first.
Okay.
Intuit reported better than expected profit and revenue. They're the makers of QuickBooks and TurboTax and those type of things, and so they've seen a big improvement in their QuickBooks business, and they just recently acquired one of the email marketing companies called MailChimp. So they've been in acquisition mode a little bit there. They're trading up 1.4%, and so.
I was going to say that's not necessarily good for the tax prep business, is it?
No, well, no, it's not. But most of it's coming from QuickBooks, I think. But the other part of that is that they're seeing an increase in their QuickBooks business, but that could also, if things go south in recessionary times and businesses start to close, Intuit will get impacted negative from that as well.
That's a valid point, too. I know one of the other big ones that you were watching kind of impacts on the housing numbers that we're playing with. Toll Brothers reported.
They did. And Toll Brothers, they're a luxury home builder. They did beat on both their top and bottom lines for this last quarter. Now, they did reflect on the fact that interest rates are increasing, which is making it mortgages more expensive. And so they're trying to, kind of moderate what they're doing and how they're working through their inventory now, but they're up 3.25% right now.
One indication in the housing market that's good.
Yeah, there we go.
I hate to say it, but that feels like an outlier right now, given all the crud we've been getting out of the government and the other reports. How about you?
Yeah, that is true. That is true.
Got any others we should be catching up with?
That's really it. That's all I have kind of on the earnings front right now.
All right. I didn't know whether we had one more or not. Resetting the table, the techs and the growth stocks really got creamed yesterday because Snapchat just scared the bejeebers out of that market. But blue chips actually had an adequate day yesterday. 45 minutes before we open, do we see any green ink anywhere this morning?
Only where we don't want to. So the indexes are heading south this morning. We got the Dow down about 0.4. That's about $124. We've got the S&P 500 down a third, and then we got the NASDAQ 100 down between 4 and 0.5. And then we got small cap, the Russell 2000 down about 0.25 point. So everything's going south there. Gold and silver's not helping any either. Silver's down 1%, back below 22, and gold is down about 0.8% as well. Crude oil is the only thing heading up 1.3% right now, Dave, to 111.19. I got to say that gas was at 4.59, and on your news report today, they said the highest that we had was $4.58 down in Fort Lauderdale, and I beg to differ with them because I've seen it at 4.59 here. So, yeah, gas prices are going up.
Oh, yeah. The word is nationally, they eked up another penny a gallon across the national average overnight last night. World markets, the Asian Rim, by and large, up at the close this morning about 6 a.m. Europe is kind of looking and saying, well, they aren't moving much over stateside, so they're trading up fractionally this morning, halfway through their trading day. Getting a plan to know how you're going to retire and how you're going to retire with knowing what you got, that's kind of an art form, and it takes an expert. How do I get a hold of you to get your expertise in that process?
Dave, we developed our core retirement design. And so one of the things we like to offer folks is just the simplicity of a 30-minute phone call. Just call our office, 863-382-0037. Tell them you want a core retirement phone consultation. They'll put you on the schedule. We'll spend 30 minutes answering questions, making sure they're on the right path for the retirement that they always dreamed of. Again, that number is 863-382-0037. And then join us this Memorial Day weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And we're at the midpoint in the week. That means we got a couple more. We'll see you tomorrow morning here at Light FM. Fair enough?
Fair enough, buddy. You have a great day.
Thank you, Phillip. It's 105.7 Light FM and Statler Financial Services' own Phillip Statler.
Hey, folks, again, I want to thank you for joining us today as we're halfway through this week. Remember, we're here for you to answer questions. We're available via 30-minute phone consultation, no cost, no obligation, to make sure that you're on the right path for the retirement you always dreamed of. Give us a call at 863-382-0037. Hey, with that, have a great day. I look forward to speaking to you again tomorrow. Bye now.